Will home prices go down in 2025? Whether you are a buyer who's maybe been sitting on the sidelines, or maybe you're a homeowner who's worried about your current investment, maybe you think maybe there's going to be a housing crash coming sometime soon. Today, we're going to dive into what the experts and the forecasters are saying about what's happening with home prices right now. So let me start with the bottom line. The answer is we don't know for sure, but let me tell you what people are predicting. So Zillow actually got really bearish on the housing market and predicted that between March 2025 and March 2026, that home prices would actually decline 1.7%. Another major forecast that ends 2025 down 0.9%, so just a little less than 1% what we have right now in the average housing market price. And then the National Association of Realtors was actually more optimistic. And they predicted that we would end 2025 with the average home price cost up 2% from the previous year. So we're seeing some mixed predictions, and what could be causing that? Well, let's talk about some of the key factors that affect home affordability. And the first one is mortgage rates. Now, we have seen a slight decrease in mortgage rates recently, but we don't anticipate they are going to breach the 6% mark by the end of the year. In fact, JP Morgan thinks they are going to stay above 6% all the way through the end of 2025. Now, at the beginning of 2025, we had rates that were closer to 7%. Now, that interest rate really affects affordability. So towards the beginning of 2025, we had closer to a 7% interest rate. And with that interest rate, what we found was that only 31.5 million households could afford a median priced home at that interest rate. Every little bit that interest rate ticks down matters because it increases the affordability and how much monthly payment that buyer can afford. So interest rates have been a key thing to watch and to continue watching as we head into the 2026 housing market. And that brings us to our next key factor, which is affordability. The fact is we have been in an affordability crisis for a little bit of time now. 59% of Americans don't have enough income to afford a median priced home. 55% say that they think home prices are too high, and 46% can't afford the down payment and closing costs. Now, this is a big deal because we have 69% right now of homeowners have a rate of 5% or less, and 24% of those have a rate that's under 3%. This creates what the experts call a lock-in effect. We have people who don't want to move because they don't want to give up their really low interest rate. So as long as interest rates stay high, we have certain people that want to go somewhere, but they won't because they don't want to give up that interest rate they have locked in right now. Another key factor is inventory. We have had historically low inventory levels for the last several years, especially ever since COVID, and those are starting to get better. So that eases the increase on home prices somewhat. But this is where it really matters where you live. If you live in an area where inventory levels are really increasing, you are gonna start to see prices drop some. What does this mean for you? If you are in a market that's been overbuilt, maybe you have a ton of new construction around you, you could see steep pricing declines. If you're in a market where inventory is really tight, maybe you've had a surge of population, just the opposite is going to happen. You're going to see some price increases. And the markets that have seen the biggest gains over the last few years are actually the most vulnerable when it comes to market corrections. So if you lived in one of those cities where everybody moved there and prices just went through the roof, you might be in a market that's really struggling right now. Now, another key factor is sales activity. So the National Association of Realtors is actually predicting that by the end of 2025, the number of home sales will be up. Now, we have had historically low home sales this last year, the lowest we've had in a long time. And we think, what I'm hearing from the economists is they think that we have really kind of bottomed out in this first half of 2025, and that we will actually see a 10 to 15% increase in sales going into 2026. So what does that mean? It means that, first of all, we think buyers have kind of adjusted to the new normal, which is these interest rates that are between 6 and 7%, which if you look at historically, that's actually a really decent interest rate. It just feels high after we had those 3% interest rates coming out of COVID. So people are adjusting to the fact that this is about where interest rates are going to be now, is somewhere in the 6% range, and buyers are starting to get off the sideline and buy homes. That is what is keeping home prices from crashing or steeply declining, because we do still have a pretty steady steady housing market. So let's talk about what that means for buyers and what it means for sellers. So if you are a home buyer right now and you are thinking, I'm gonna keep waiting until interest rates get down really close to 6% and then I'm gonna jump in the market. Well, you can do that, but just know that a lot of other buyers are gonna do the same thing. The last time we had really low rates, what did we see? We saw multiple offers on almost every home selling for above list price. So if you do want to wait a while for those rates to come down, just know that you're probably going to have more competition when it's time to get in the market and start making offers. If you're anticipating a crash or you're waiting for a crash, doesn't look like that's going to happen. For home sellers, here is what this current market means to you. First of all, home sales are slower right now, but they're not impossible. So you want to make sure that your home is priced really well. You want to make sure that it is staged really well. As we see this increase in inventory, it means you are competing with more homes. So buyers may not be willing to buy your house if it needs work or it's a fixer-upper when there are a lot of other opportunities in the neighborhood where they can just move right in. So just be strategic if you are trying to sell. Home sales are still happening. You might have to have a little bit more patience than you did a couple years ago. What about if you already own a home and you're not planning on buying or selling anytime soon? Well, first of all, these slight adjustments in home prices should not cause you to panic. If you bought your house before 2020, your house is worth significantly more than it was whenever you purchased it before. If you bought your house since then in the last few years, just remember a home is a long-term investment. This is not something that you're going to turn around and make a ton of money on if you've only been in the house for a year or two, but historically, home prices have always increased over time. So if you just hang on to that home long enough, you are gonna build equity and your home value is gonna go up if you just wait it out. So what are the wild cards out there that could change basically everything I just said? Well, the first of all is the Federal Reserve policy. If something were to happen and they were to drastically cut rates, well then we would probably see a really big boost to the housing market. The second one is an economic recession. If for some reason we were to fall into a recession, that obviously would impact how many buyers are in the market. However, I will point out, if you go back and look historically through every recession, home values still rose. So don't let a recession freak you out. A couple others could be government policy, if there is any significant change to policy that affects the housing market, and construction policy. If we see builders significantly ramp up production, well then that can have an impact on the housing market around you. And then the last one I would just say are migration patterns. If you live in an area that is seeing a huge influx of people right now, or conversely, if you're seeing in an area where a lot of people are moving out, that supply and demand is going to affect the value of your home. So what's the experts' consensus? Well, it basically boils down to this. First of all, we are not heading for any type of housing crash, kind of like we saw back in 2008. As anticipated, we thought rates would start to come down towards the end of 2025, and so far that has been happening. We do think there will be some modest price declines depending on your market area, but again, when I quoted those statistics earlier, they were 1% and 2%, like pretty minimal fluctuations in price, nothing significant. And we anticipate that price appreciation is just going to slow down some. So homes are going to continue to appreciate, but instead of what we would normally have said was 3 to 5% a year, we're now looking at more like 1 to 2% a year. So what's my advice? Well, my advice is to focus on your personal situation. Do not be swayed by these fluctuations that are going on in the market right now. Move when it is the right time for you to move. And just remember, you do not need to time the market perfectly. The only way that you really need to make sure that you get the absolute best price on a home is if you are maybe an investor or someone who's flipping a house and you are going to be turning around and selling that house 6 months later. That's when you have to really time it right. Otherwise, real estate is a long-term investment. As long as you get a decent price on your home, you're able to negotiate a little bit, you're not paying way over market value. As I said earlier, you hang on to that home, it is going to go up. There's not a house in America right now that is worth less than it was 10 years ago. So this is a long game. Don't panic so much about a 6.2% rate versus a 6.7% rate. Buy when it's the right time for you to buy, hold on to it for 3 to 5 years, and I promise you that is going to end up being a great investment for you. If you want more of our opinions or you have more questions about what's going on in the housing market, we watch this stuff all the time. This is what we eat, sleep, and breathe. So feel free to reach out to us with any of your real estate questions. We are always happy to help.